It's good to see you again. What are you referring to?
Well, look, I think since the beginning of the year, we've seen an altitude sickness when you look at the valuation multiple. The valuation multiple on a forward basis for the S&P 500 was 21.5 at the start of the year. We got down to about 16.5 at the lows a few days ago. Now we're back up to 17.5. So I think to a large extent, clearly with the benefit of hindsight, the market was overvalued. A lot of that was in the mega cap 8 big cap names, technology-related kind of names. I think we've seen a tremendous correction in that area. And now the question is whether the market can accept the kind of earnings expectations that analysts are delivering and whether those expectations will be correct. I think they will be correct if there's no recession. But clearly, I can't dismiss the risk of a recession, which has been clearly increasing. I think most people have been conceding that fact.
But even if there is no recession, don't earnings still need to come down if you're going to have a slowdown? And they really have not come down. Yeah. And I think that would be the Mike Wilson point of view, who I spoke with just a short time ago. I don't know if you had a chance to hear any of that, but he's not calling for a recession, but he still says earnings expectations are delusional at this point.
Yeah, I don't think they're delusional because I think one of the reasons that they've been boosted is because of inflation. Revenues are an automatic inflation hedge. Revenues of the S&P 500 go up along with inflation. And then the question is, what do earnings do? And that, in turn, depends on the profit margin. And so far, the evidence, I think, has been pretty convincing that companies have done an amazing job of holding on to their profit margins. We've had a few exceptions with a company like Target and Walmart. But on balance, earnings in the first quarter, instead of being up 5%, have come in at 10%. And clearly, companies, the bulk of the majority of companies, have actually held on to their profit margins. If they can continue to do that, which I think they might be able to do, then earnings will continue to grow along with the revenues, and revenues will get a boost from inflation. Stocks are an inflation hedge.
This is going to be the biggest point of contention then, because I mean, heading into the next quarter, because some would say, well, it's going to get real in Q2, Q1. You know, again, looking backwards, right? Sure. You still had the ability to pass on prices to your customers. And at some point, you run out of room. And you just referenced Target, Walmart, and some others. Right. Those were arguably just the beginning, not the end. You don't agree with that?
I don't agree with that. I think companies have done a remarkable job at increasing their profit margins during good times. I think during these bad times, they are continuing to do a very good job of it. Now, of course, maintaining profit margins isn't necessarily just a question of whether you can pass your costs into prices. There's also productivity. And I'm a big believer that a lot of companies are increasing their productivity. I'll grant you that the first quarter productivity numbers were awful. But there's definitely been an upward trend in the growth cycle of productivity. And I think that's going to continue to come through loud and clear. And I think one of the ways that happens is with technology spending. And I think technology spending is also going to be a big surprise going forward here. So I think that the earnings story is not as grim as others are making it out to be. I think, look, Scott, you have to admit the earnings story has held up remarkably well up to now. And for over a year, there's been lots of reasons why it shouldn't have done so. So I take that as some comfort in the notion that something has changed. I think companies are managing for the profit margin, and they're doing an awfully good job of it.